Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for the week of July 23rd, 2024. Anyways, I want to pop up a year chart. I'm going to keep this over my left-hand side here. This is 1 year of 10-year Treasury. Now, I looked at MBS charts and I looked at a few other things, but I want you to see something. And you can see it right here. I'm going to pop open a chart, though, over here. You can see this constant trend of downward rates. If you look at the last several months, yeah, it goes down and back up again, down and back up again. But if you look at the average, you can see this nice downward trending line, and I'll draw a line on that chart. That means that in the future, I mean, this is all data driven. I don't want to say what it means in the future, but data driven, right? Everything's kind of settled out over the last few months. As we've talked about quite a few times, good data keeps coming out, but every time we see rates go up, it's kind of a knee-jerk reaction to something negative, but then it settles back down and it keeps on its downward trend. I want to say, projection-wise, is it going to continue down this path? For the foreseeable future, it should. We don't know for absolute certainty, but we're also expecting the Fed to actually finally get to a point where they're going to reduce the Fed rate in maybe this time, maybe next time. So that's a good plus. But what does that mean through the summer? Well, unlike most summers, we're actually getting a downward trend of rate through the middle of summer on the average, which means get out there, find some buyers, and go get some houses under contract. A lot of markets in the industry have shifted to a buyer's market in the last few months. Depending on where you're at, what market you're in, it's definitely changed. Rate-wise, I'm going to go to lcmloans.com/rates. Now remember, the rates you search for are going to be lower in reality than what you find on the tool. Remember, I have the tool show higher rates. But I'm searching a 760 FICO, the percent down that you would need for the different programs. So for example, FHA 3.5, conventional 5, that type of thing. But Govy, FHA, VA, you're solidly mid 5s. Remember, FHA and VA is going to be 3/8 to 0.5% lower than what you see in the search tool. So what the actual rate is going to be lower, 3/8 to 0.5%. And the reason is, my really cheap investors, I don't have on the search tool. I don't want them on there because sometimes some deals can't use the cheaper investors, and I don't want people to see that, right? So you look at solid mid 5s for a little bit of money. You can dip down into the lower 5s. Check your email out. That's going to be there on that. Let me look at conventional real quick. Conventional is mid-ish 6s. Now conventional, we have some investors that are maybe an 1/8 or so lower than what you're going to find in the tool, maybe an 1/8 or so. And if it's home ready, home possible, it's going to be even lower. It's like low 6s right now. Pretty good deal, actually. Low 6s on a conventional is pretty dang good. All right, anyways, get out there, sell it, get her done. And if you have any questions, give us a call. We can run scenarios. We can run pricing scenarios really fast. Takes about 2-3 minutes. Call our general number. Press 1 to get a hold of anyone on the sales team. Or you can call my cell phone up directly. It's going to be in your email. Anyways, have a great day. I'll talk to you later.